Hello, good afternoon and or good morning to everyone that is joining us on this webinar. Thank you all for your attendance. I'm very excited to welcome you all to this webinar with Maria. We've got a few people that are going to be joining us on the webinar, and they're streaming in at the moment as we speak. So just while we're allowing for enough people to sort of join before we start, I thought I'd get some interaction going. So if I can ask people that are already now on the call, if you could just in the chat box, let us know where you're dialing in from. It's always good to know for context, but also just to make sure the technology is working. You can let us know your location. It's always good to know how diverse the audience is, both for myself and also for Maria's benefit as well. So whilst we're doing that, and they're still streaming in, which is a great sign. Maria, how are you doing?
Oh, sorry, I'm just unmuting myself there. Doing well. Looking forward to the session. There's just so much interest in battery storage in Australia at the moment. It's a really booming industry. So I'm very happy to give a bit of an overview of the opportunities today.
Absolutely. And it definitely seems like the dynamism, if that's the right word, within the industry at the moment, it's almost palpable at the moment. There's so much happening within the renewable energy space. So you're 100% right. I think it's very exciting times for sure. Just while we do have quite a few people that we're expecting to join. So we'll give it another couple of minutes just while we're waiting though. And I know time is precious, so we'll just give it another couple of minutes. But for the benefit of a lot of the audience, which we assume is majority from the majority from Australia, but we think we may have a few people from overseas as well. We did have a very momentous day yesterday, Maria, in Sydney. I'm not sure because I know you're based in Sydney as well, with the launch of the metro. Have you had a chance to jump on that yet and experience this new infrastructure yet?
I haven't had a chance to go on it myself, but I've seen the news and people queuing up at about 5 a.m. yesterday to be the first on the system. So it's definitely great to see the city improving its public transport links.
Yeah, absolutely. I was very surprised at the number of enthusiasts that were willing to get up that early in the morning, but that's very exciting to see. All right. So what I'll do, Maria, I think whilst we just we'll kickstart the introduction. I think by the time we get into the actual presentation, I think the majority of the attendees will be on the call. But just for the sake of introduction, my name is Fasi Qureshi. I'm the General Manager for Informa Connect Academy for the APAC region. It's my pleasure to have Maria Petkovic with us on the call. Just to give everyone a bit of background into who Maria is, I'm just going to read out very quickly Maria's bio. So Maria is currently Managing Director at Energy Synapse, a top analytics and advisory firm. Energy Synapse has been engaged to provide energy market advice to some of the biggest renewable energy developers in Australia, as well as regulatory and government bodies. Maria's commentary on energy issues is frequently featured in media such as ABC News, Sydney Morning Herald, Renew Economy, and many more. So before we pass it on to Maria, I did also want to let everyone know that there will be a Q&A session at the end of the presentation. If you look down at the bottom of the Zoom tile, you'll see a Q&A box. So if you can put your questions in there, we will be addressing those at the end of the presentation. And yeah, so I think I'm going to hand it over to you, Maria. Over to you.
Wonderful, thank you. And just confirming that my slides are visible here. All good?
Yep, all good.
Okay, great. So it's my pleasure today to speak about the role of battery storage in Australia's clean energy transition. So to start you off, I'm just going to give a very brief background on what we do here at Energy Synapse. So at Energy Synapse, we specialise in all things wholesale electricity markets, renewables, and in particular battery storage. So some of the things that we do I've got listed here on this slide, and it's really all about being able to empower the clean energy transition through data. So we have what's called the Energy Synapse platform. That's Australia's most popular data platform for renewable and storage project developers. We also provide modelling and advisory services. So that's revenue modelling in the utility scale, a lot of standalone battery projects we've been working on lately, but increasingly hybrids as well. So solar and battery, wind plus battery, or all three together. And then, of course, we have our NEM training services that we deliver in partnership with Informa. And the topics that I'll be talking about today in this webinar, they're actually a small subset of what we tackle in a 2-day electricity industry fundamentals training course. So that course gives you all the essential information that you need to know about Australia's energy market, how it all works, from the wholesale market, networks, retail, contracts and derivatives, policy. So really fantastic for anyone who's coming into this industry and really need to get up to speed quickly with how the grid is evolving. Now, we do have a special offer for participants on this webinar, and I'll let my colleague Fazia at Informa let you know a little bit more about that.
Lovely. Thank you, Maria. Just before I do that, though, I know that there was a couple of comments in the Q&A that the chat was not working. I think it should be enabled now. So if I again just get some people just to jump in, just to confirm that you can hear us clearly, that the audio is all working fine and we're all good to go. Also, if you can just let me know again where you're dialing in from, that will just make us confident that everything is working as intended. So if you can just jump on that chat, and if that's not working in the Q&A box, I think we're still having some issues with the chat, but I'll get my colleague to have a look at that in the meantime. So whilst we do that, I did also, like as Maria said, indicated, we are running a special offer for participants of this webinar, which is a 10% discount on the upcoming electricity industry fundamentals course run by Maria. As you can see, there are some really a number of dates that are available across Australia wide, and obviously we have had some excellent take up, and this is our second intake for the year. So you can have a look at those dates that are available. We also are offering this course live online for those that would prefer to have this done virtually. And in terms of contact details, you're welcome to email us if you've got any questions or queries at training@informa.com.au, or my colleague Dean will also be more than happy to ask or address any questions that you may have. So in terms of group discounts or to avail yourself of the discount, the quote to use is WPMP24. So WBMP24. So if you use that when you're registering yourself for the training course. I think that's it, Mary. I'll hand it back to you.
Wonderful, thank you. And just to give you a bit of an overview of how we're going to run this webinar. So I will speak for the next 25 minutes or so, and then we'll have an opportunity for about 10 minutes of Q&A at the end. So as I go, please be putting your questions in the Q&A section, and then we'll go through those at the end. So as many of you on the call might be aware of, and particularly if you're a local here in Australia, Australia's grid is undergoing the biggest transformation in its history. So historically, Australia's grid has very much been a coal and gas grid, and that share of coal and gas has gradually been declining over time. But it's still currently, coal in particular generates more than half of our electricity production in the national electricity market. But as you can see in this chart, and these numbers are coming from the Integrated System Plan, which AEMO publishes every 2 years. So this is the latest version that's just come out at the end of June. The system is expected to rapidly transform. So all the coal in the East Coast grid is expected to exit by the mid to late 2030s. And that coal is being replaced by a combination of variable renewables and storage. So there's certainly a lot of benefits to that. We are greening the grid and reducing our greenhouse gas emissions, but certainly a lot of challenges that come with that. Our traditional power sources of coal and gas and a little bit of hydro, they've got advantages in that we have control over these power plants. And the expectation is that when people come home, flick on the light switch, that power is going to be there. So when you're able to actually control your electricity production, it allows you to make sure that you're meeting demand at every point in time. The challenge that we're having as we go to a more a renewable grid that's dominated by variable sources like wind and solar is that we're losing control of that supply side, which makes balancing supply and demand much more challenging. So resources like storage are going to be a really important lever for us to be able to make sure that power is available when needed and to take advantage of all the abundant wind and solar resources that we have in the grid. Now, the other trend that you will notice in this chart is that the total electricity production that we are expected to have is going to potentially more than double by 2040. So a lot of that will be due to electrification of the economy and in particular the transport sector. So when we're talking about how much renewables and storage we need to build, it's not just about replacing the aging coal that's going to come out of the grid. We've also got to meet all these new sources of electricity demand that will come into the grid over the next 20-year period. So at the moment, those variable renewables, so that's wind and solar, they generate about 31% of electricity generation in Australia's national electricity market, or NEMA for short. So that's on an annual basis. But if you look at this on an instantaneous basis, the share can actually be much higher. So what we're looking at on this chart on the right here is we've broken out the time periods in the grid rather than an annual basis. We've broken them out into 30-minute blocks. And then we're calculating what's the highest share of renewables in any 30-minute block for each month over the course of several years. And you can see that instantaneous share of wind and solar is already reaching very high levels, so around 70% in the months of October and November, and that's across the entire NEM. So even though our total share annual-wide of renewables might seem a little bit low at 30%, the fact that we're already hitting that 70% number in certain time periods just shows you that the Australian energy market operator, they're already facing and solving some of those challenges that come with operating this highly renewable grid. And if we look at South Australia in isolation, and South Australia is leading the world when it comes to uptake of variable renewables, they are regularly on a year-round basis hitting close to 100% variable renewables on that instantaneous basis. So South Australia gives us a lot of clues about where we might be heading with this transformation for the rest of the grid. So we'll use South Australia as a bit of a case study here. So back in the day, 20 years ago, South Australia was very much your traditional coal and gas grid, and there was virtually no renewables in the state. So then unsurprisingly, when you have a grid that's just coal and gas, what tends to happen is that the coal serves the base load demand in that particular grid, and then gas tends to do more of the shaping. So really, coming on when there's higher demand in the grid and when prices are higher in the market. So when it comes to the technical requirements in the grid, the main requirement that we need to be conscious of is that electricity demand and supply must be in exact balance in every point in time. So at every point in time, we need to make sure that there's enough generation to meet the demand in the system. But this paradigm, somewhat of an old school paradigm of baseload and peak, that comes from the economic characteristics of those traditional generators. So coal has a very high capital cost. It's not very flexible, but once you've built it, it's relatively low cost to run. So the most economic way to run that type of power station is in a base load fashion. And then when you get to gas power plants, and in a particular open cycle gas, they've got a lower capex, but their operating costs and the marginal cost of production tends to be much higher. So you only really want to run that resource when the electricity price is high enough that it can offset that marginal cost of production. So those economic characteristics of these power stations, that results in the baseload and peak type operation, but that is not the only way that we can satisfy that key requirement of making sure that demand equals supply. And we're now seeing quite a different model that's emerging. So this is what South Australia looks like now. So the last coal-fired power station in South Australia actually closed back in 2016, and variable renewables are now supplying about 75% electricity in the state. And as we said, on an instantaneous basis, they're regularly close to that 100% mark. So what we've got on this first chart, this is just an example of about a 2-week period in South Australia. And I've specifically chosen quite a volatile period here to illustrate this context. But basically, each of these peaks that you're seeing is an individual day in the grid, and that's the demand. Now, if you take that demand and then we say, okay, well, here's what the grid needs, but let's take away from that all the wind production that we're getting in the state, solar production, both large scale and distributed, and then what's left over is this residual demand that we're looking at on the right. And as you can see there, there's really no base load that's left for something like coal to be able to serve. That residual demand profile is actually very erratic. Sometimes it's almost as high as the total demand in the state. Other times it might be negative. So very, very variable. So what we actually need in the grid of the future, it's not something that runs in a base load fashion and is clunky and not very responsive. What we actually need is the opposite of that. So resources that are highly flexible and can jump in quickly when needed to fill these gaps between the demand and then what we're getting from wind and solar. So those highly flexible resources that can come from a combination of gas, batteries, hydro, demand side resources, and we'll likely need a portfolio of all of those solutions. But what we're going to focus on in this webinar is how can batteries in particular play that very crucial role going forward. So in order for anyone to invest in battery storage, they need to be able to earn revenue from providing these services to the grid. So what we've got on this particular chart is an overview of the different, well, it's not an exclusive list, but the kind of main categories of revenue streams that you might be able to tap into with a battery. Now, in that 2-day training course that I mentioned, we actually go through each of these in a lot of detail, but I'll just very quickly take you through some of the key concepts now. So firstly, on the right-hand side of this chart, we've got the revenue sources that come from a competitive market. So wholesale energy arbitrage, and then frequency control ancillary services. And these, these are really like the bread and butter of your business case for any battery. So in Australia, our wholesale markets are somewhat unique. So we have what's called an energy-only real-time market, and our pricing changes every 5 minutes, and we've got quite a wide floor and cap. So the minimum price in the market is minus $1,000 per megawatt hour. And as of July of this year, it can go all the way up to $17,500 per megawatt hour. So this is an incredibly volatile market. And because a lot of the reasons that we talk through the course, this particular type of structure creates some of the most volatile market conditions out of any type of electricity grid in the world. So a huge amount of volatility in these wholesale services, both energy arbitrage and FCAS. And this is actually one of the things that creates a bit of an investment challenge when it comes to battery storage. So you've got this quite uncertain revenue stream, and you don't have a lot of forward visibility on what that revenue stream will be, which then makes it a bit more challenging for projects to get financing, and in particular things like battery storage, because they really make money on the volatility, on those volatility events in the market. And then on the left-hand side, we've got some of the more contractual types of revenue streams that you can tap into. So, for example, with network services, if your battery is in a constrained part of the grid, you might be able to get a deal with the local transmission company there to alleviate some of that congestion, and in exchange, they might be able to give you a long-term payment under a bilateral contract. And then there's all sorts of other contractual structures that you could enter into with retailers or with large end users of electricity that will help firm up some of that revenue uncertainty. So those contracted revenue streams are quite helpful in eliminating, well, not eliminating, but reducing some of the volatility in your overall business case. And generally, the more contracted revenue streams you've got, the easier it will be to get financing for the project. So there's some of the revenue streams that you can tap into as a battery. So then what has the rollout of batteries looked like across the NEM over the last several years? Well, the first big battery that was built in Australia was the 100 megawatt system at Hornsdale in South Australia, and some of you might recall that came about from a now infamous wager on Twitter between two billionaires, Elon Musk and Mike Cannon-Brookes. So that was the first system that was built. It was quite a large system. At the time, that was the biggest battery that had been built anywhere in the world. And it actually took us about 4 years before we had another battery of that kind of scale in the grid. So the next 7 or so batteries at the large scale that followed Hornsdale, they were all 30 megawatts or less, and a couple of reasons for that. So firstly, batteries were this completely novel asset. Investors and financiers, they didn't really know how these things would make money. So anytime you've got something new like that, you don't necessarily want to go straight in off the bat with a huge 500 megawatt system. You kind of want to reduce the size of your investment to reduce that overall risk. So those smaller systems were a bit more palatable. I mean, almost as a pilot to some of these investors that were coming into this market for the first time. And then the other issue is, if you are a smaller system, say like 30 megawatts or less, the grid connection process can often be much simpler. So being able to, some of those smaller systems, I mean, they were just able to get across the line a little bit faster, because grid connection was a bit simpler than a really large system, and then also those financing challenges as well. And I mean, most of them also had various government support, whether from organisations like ARENA or various state governments. But now we're very much in what I would call a rapid growth phase. I think we've got about 27 or so large-scale systems that are installed in the NEM, and investors are now understanding this business case more clearly. That the need for storage is also in the grid just fundamentally is quite clear. So we're seeing a really rapid uptake of projects that are being developed, and much more ambitious projects as well that are now under development in terms of their size and scale. So when it comes to batteries, there's two main sizing criteria here. So the first is on the power side. So how much, what's the maximum power that this asset can output? And then the other key parameter is the storage duration. So that tells you how long you could keep discharge. Say if you had a 100 megawatt battery, how long you could actually keep discharging those 100 megawatts. So most big batteries in the Australian grid that have been built so far, they've got at least 1.6 hours of storage. So that allows them to play in both wholesale energy arbitrage and FCAS. There are some exceptions to that, so a notable one being Dalrymple with only 16 minutes of storage, so that's quite a short duration battery, and it really only does contingency, FCAS and network reliability type services. So most of them are really in that 1 to 2 hour range, but we are yet to see anything beyond 2 hours that's been built in the NEM. And it is more difficult to get financing for those longer duration batteries because that investment case is more uncertain. So on that topic, I do want to end today's webinar by talking through some of the contractual structures that asset owners can use to try to reduce some of that revenue uncertainty, because that's such a key factor in being able to reach financing. So in the electricity industry fundamentals training course, we go through a whole bunch of structures and details like futures, caps, PPAs, options, all sorts of things. But for today, I'm just going to touch on 2 types of agreements that are specifically relevant to battery storage. So the first one is something called a tolling arrangement, and this has become quite popular for energy storage projects. And the best way to think about a tolling arrangement is it's very much like a long-term lease. So there's an off-taker that will pay the developer of the project an annual fee over a set number of years. So that's like your lease payment, if you will. And then the off-taker has the ability to charge and discharge that storage asset generally at their discretion, and then they retain kind of all of that wholesale market revenue. So you can see under this type of arrangement, there's basically a transfer of risk from the developer / owner of the asset to the off-taker. So in terms of revenue, the owner of the asset has this lovely fixed revenue stream for X amount of years, and they can very easily take that to the bank, and banks love that because they're like, okay, well, here's the cost of your project, you've got this fixed revenue stream, great, we're willing to lend against that. And then it's that off-taker who's taken the risk on what will actually happen in wholesale energy and FCAS markets and all the volatility around that. So that's the simplest type of tolling arrangement, where you've got that complete transfer of risk. But because this is a bilateral agreement, there's a lot of scope for individual negotiation. So you could have a bit of a grey area, say, where the developer might want to entice the off-taker with quite a low annual fee, but then they might want to take some of the upside of the project as well. So you can, structure this in different types of ways. It doesn't necessarily have to be that complete transfer of risk. And then the other structure that I'd like to touch on today is the capacity investment scheme. So this is actually a relatively new federal government policy, and it's a national framework that's designed to encourage new investment that will support the energy system to reach 82% renewables by 2030. So under the capacity investment scheme, the target is to be able to support 9 gigawatts of clean dispatchable capacity. So that 9 gigawatts relates very much to storage and battery storage in particular, and then 23 gigawatts of variable capacity. So there's tenders that are running, competitive tenders every 6 months under this capacity investment scheme framework. And if your project is successful in that, then you're actually able to receive a revenue underwriting agreement. So again, this is all about reducing that uncertainty in the revenue side of the project, which is where all the volatility happens in your business case. So the capacity investment scheme, it works somewhat similar to a futures contract, and you'll see, if you've seen this type of chart before, you'll see what I mean there. But basically, there is a project revenue ceiling and then a project revenue floor. And what will happen is that if the revenue for your project drops below this floor that's been nominated, then the Australian government will actually top you up. And in the latest tender, they'll top you up for about 90% of that difference. But then if you earn more revenue than the revenue ceiling, then the government has the ability to claw some of that back. And in the latest tender documentation, that's been set to about 50% of that. So you can see that it's all about eliminating that very high volatility in the market and really protecting you from the worst case scenarios that can happen in the grid. So it's really designed to increase that investor certainty, but the intention is that your revenue ceiling and your revenue floor, that they're set to be quite wide. So the intention is that project owners will, in addition to this structure, will also be engaging in other types of contractual structures to de-risk the project further, but the capacity investment scheme is designed to really protect you from those worst case scenarios and make it a little bit easier to get financing and other contractual structures across the line. So in terms of the types of battery projects that are eligible under this scheme, well, one thing to be aware of is that each time a tender runs, it does have its own specifications. So, I mean, just be aware of that. If you do want to participate in this scheme, you really need to look at the documentation for that particular tender. But now that we've had a couple of pilot tenders and the very first kind of full tender, if you will, we've seen a couple of common threads, and I'll just walk you through those quickly. So the first one is that you need to be able to produce zero scope 1 emissions. So what that means from a storage perspective is that if you have a battery that's charging from the grid, well, that's considered to be zero scope 1 emissions because electricity is a scope 2 emission there. So you're all good on that front. Capacity needs to generally be at least 30 megawatts. So the federal government set some very ambitious targets around the amount of capacity that they want to actually support. So they don't want to be chasing rats and mice and kind of 1 megawatt here, 1 megawatt there. It does need to be a sizable project. For a battery, you need to have generally at least 2 hours of storage duration. So that's the official wording, but we are hearing through the grapevine that there might be a bit of a preference for 4 hours there. And the project needs to be beyond early stage development. So what that means is you really need to have had your land secured and have your grid connection process in progress. So these are supposed to be more serious projects rather than just something that's a thought bubble in someone's mind. So that's all we've got time for. I hope that was useful for you. As I mentioned in the course that we run, we really go through all of this stuff in a lot more detail. And I'll let Fazi from Informa just recap that special offer that we have for you today.
Thank you so much, Maria. First of all, I think it's quite evident that we've only scratched the surface of what we could cover. So I do thank you for putting that presentation together, Maria. It's really been really informative. Just to tack onto that in terms of touching into Maria's subject matter expertise in this area, we are running the Electricity Industry Fundamentals course. As you can see, we have a few dates across Australia, as well as a live online option. There is a 10% discount for those wishing to participate in this training. I will also just want to make sure that we will be sharing the recording of this webinar so everyone can review the presentation slides in their own time. But I think we've had a lot of questions come through, Maria. So if you're happy to take some of them, I'm happy to read them out, and we'll go from in order of when they've come through. So I think one of the first questions that we had was in relation to how is the structure of PPAs changing due to BESS being added to generation?
Yes, I mean, that's a really interesting question. So, hybrid assets are starting to become, well, I mean, there's a lot more hybrid assets under development. We don't really have too many hybrids that are proper hybrids that are operational, but certainly the development phase is a lot more hybrids coming through. And I would say one of the biggest changes that we're seeing in PPAs in a true hybrid is that a lot of them are now being set up to actually be at the point of connection rather than for the individual assets in the hybrid. So like having a separate PPA for, say, a solar farm and then the battery, it's actually kind of being managed at the point of connection. And the other thing is in that type of PPA, if you do have a battery, you're generally going to have a much higher PPA price than, say, solar on its own.
Lovely. I think that question came from Graham. So the next one is from Anonymous, but they would like to know, what is the difference between distributed solar and utility solar?
Yes, so when we say the words utility and distributed, what we're generally talking about there is scale. So the size and what it's connected to. So utility scale systems will typically be connected to the high voltage transmission grid, and they might be in the hundreds of megawatts. And then distributed systems, they'll be connected to the low voltage distribution system. So that might be like the solar panels that you have on your roof at home, or if a business or commercial premises has rooftop solar or even a small ground mount systems, but they're generally much smaller systems. But in Australia, we are really a world leader in those smaller distributed systems. I mean, they make up a huge part of our grid.
Fantastic. Christopher asks, at this stage, economic viability of most commercial projects are based on intraday storage. At what stage do you see a financially viable market evolving for projects to balance supply across multiple days?
Okay, so that's really a question on short duration storage versus long duration storage. And I would say that, long duration storage, it's very much dependent on those coal exits. So as coal-fired power generation exits the market, and remember these things are providing power 24/7, there's now when that generation exits, there's going to be bigger gaps that we have to fill. So at the moment, our main gaps are in that 1 to 2 hour range, which is why you're seeing batteries with that kind of storage duration coming up. But as you get, that baseload generation coming out of the grid, and then if you're in a situation where you have a bit of a lull in wind output, and we did see that around May, June this year in New South Wales, there was kind of record low output across the wind farms across the NEM really. That's really then when you need that longer duration storage. So there's certainly a fundamental need, I would say, for long duration storage. But the business case is challenging because you don't know when you're doing your cash flow analysis, you don't know exactly when those events will happen. Will it be in year 2 of your cash flow cycle? Will it be in year 10 and year 15? And that uncertainty makes it really, really difficult for banks and other institutions to actually give you money. So that's why having contracts in place, so things like tolling or being able to tap into government incentives to give you more revenue certainty is especially important for longer duration storage.
Interesting. Andrew is asking, is there a scenario where some baseload power is required for grid stability versus capacity?
So grid stability, that is quite a general term, and it depends on what do you mean by grid stability. So when we're talking about, for example, frequency control ancillary services, these things, that requires a response in kind of like a 1 second. Now that we've got a 1 second market, it's a 1 second response. So you certainly don't necessarily need coal-fired power generation. With that, other types of grid stability services, you might be referring to, say, inertia in the grid, which all the traditional power stations that we have that have a big spinning motor, they're able to provide inertia, which is really important for keeping the grid stable. But there's now so much innovation in inverter technology. So we're seeing the first grid forming inverters coming into the grid. So they have the ability to provide virtual or synthetic inertia. They can also provide voltage stability as well. So I mean, some of this new technology is really allowing us to provide almost all of those services that the traditional generators have been doing. So I think we're very much on the way to solving that problem.
Okay, very good. Millie wants to know, could the energy market be restructured to be less volatile?
So that's quite an interesting question. And when we go through the course, one of the things that we do is we actually talk about what are the various options that if we were designing an energy system that we could have. So there are some types of structures that are less volatile, but I mean, generally speaking, regardless of the specific structure you have, electricity markets are the most volatile type of market in the world, right? I mean, if you thought foreign exchange or even cryptocurrency was volatile, it's got absolutely nothing on electricity markets. And that all comes from that fundamental requirement where on an instantaneous basis, we have to match supply and demand, right? So that's very different to say, if you were buying shares on the share market, you could buy a share, hold that share for 10 years time, maybe hold it forever, and then, sell it when you need to. But what's different with electricity is that it's all instantaneous, and that instantaneous nature, regardless of the type of structure you have, you're going to have volatility. So volatility is an inherent part of the energy market. But the challenge that we have at the moment is we're asking the private sector, can you please invest more money than you ever have in this industry? And can you please do it faster than you've ever done it? And that's very difficult to do when you do have a lot of volatility that's inherent in your industry. So that's why policy levers like the capacity investment scheme are actually quite important. And, that scheme is probably, I would say, the best policy that we've had in Australia for a very long time. Those of you who've been in this sector, you will know we've been through the revolving door of 3 and 4 letter acronyms for energy policy, but that's probably the strongest piece, kind of strongest framework that we've had, and it'll go a long way to alleviating those volatility concerns for investors.
Very interesting. Maria, I know I am conscious of time. Are you okay to answer a couple more?
Yes, I'm happy with that.
Lovely. So Anonymous wants to know, how does the emissions reporting work in terms of battery usage?
So emissions reporting. So from a scope 1 perspective, if you're a grid connected battery, as I mentioned before, you don't have any scope 1 emissions, typically with a battery storage system. But you may have scope 2 emissions depending on when you're charging and discharging. So there's something called time matching, which is becoming quite common in Europe. And what that means is, say if a big company wants to prove their green credentials, they want to not just buy a total equivalent of green power to their energy usage, they actually want to make sure that the times that they're using that power match up with renewables in the grid. And when you're under that type of contractual structure, then storage projects are often more conscious of when they're charging and discharging, because they're not just trying to arbitrage the market and make money, they're also trying to fulfill this emissions requirement. So I mean, that is something that we're seeing in Europe. Uptake of that not quite happening yet in Australia. Most corporates in Australia so far have been happy to just procure their large generation certificates equivalent to their load and say we're now 100% net renewable. But I think in the next kind of 5 to 10 years, we might see some of that time matching starting to become a bit more common in Australia.
Very interesting. We might make this the last question. Again, we were scheduled to go until 12:45. So this anonymous question is asking, do you think the upcoming NEM review will entail a major overhaul of the market structure to better incentivize VRE, which to be more than baseload, or will it be relatively modest reform?
Yeah, so I mean, anyone who's ever seen kind of a NEMA reform, It's hard to call it at this point, quite frankly, because these things take time, and you know, some of these reforms are still quite early. So I think we'll have to wait and watch on that one, and see how it pans out. You know, it's at the stage where it's still a bit of a thought bubble rather than a really detailed design.
Got it. Well, I think we're obviously very conscious on, you know, sticking to time, and I think everyone's time is very important. So first of all, your time in particular, Maria, thank you so much for your presentation and taking the effort to put this together. I know that for those that we weren't able to answer questions in the time allowed, that there is some contact information both for the training course, but as well as if everyone wants to just reach out for some particular direct responses from Maria. Are you okay for people to email that email address there, Maria, down the bottom?
Yes, so I've put that up. If anyone wants to contact me, feel free to do so on my email. You can also find me on LinkedIn. So feel free to ask me about anything on this webinar or the course that we're running. And then on the previous slide here, we've also got Dean's contact details from Informa. So that's specifically for the course and help with bookings and the like.
Fantastic. So thank you so much for everyone for attending. It's been we really appreciate your time, and again, thank you so much, Maria. It's been great to have you.
Thank you.
Thank you. Thank you, everyone. Cheers. Thanks. Bye bye.